a lot of the GBTC orders, don't forget, a lot of hedge funds were buying it at a discount and hedging. And today it collapsed to zero because it went to an ETF. So there's a lot of selling of Bitcoin that was coming out of that. So there might have been $1 billion of selling that came out of that. So as people were unwinding that trade and taking it off. So that's why the market was a lot choppier. It's not really people taking profits. It was people taking profits from that particular trade and exiting some of GBTC. So that makes more sense of it for people. People are like, well, why didn't it happen? The laughable thing was how obvious it was that the market, I love the way the market goes, well, now we've got the Bitcoin one. Where's the ETH one? ETH starts wildly outperforming. It's like, again, hilarious. The market doesn't give it 1 second before moving on to the next thing with its regular people don't care what's just happened. It matters to us. It matters to these ETF providers for the customers they've got. But the average Joe investor or average Jane, they don't really care yet. But it'll filter down as they'll see more reports on it. Their investment advisor will tell them about it.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day. The impact of GBTC orders on the market has been noteworthy, revealing a dynamic interplay between various financial strategies and their repercussions on asset prices, particularly in the realm of cryptocurrency. Many hedge funds capitalized on purchasing GBTC at a discount, concurrently hedging their positions with Bitcoin futures. This tactic allowed them to leverage price differentials, optimizing returns within the volatile cryptocurrency market. However, the landscape swiftly altered with the advent of the ETF. As the ETF made its debut, hedge funds found themselves compelled to unwind their GBTC-based trades. Consequently, this unwinding process exerted significant selling pressure on Bitcoin, triggering fluctuations in its valuation and market sentiment. Markets, by their nature, are adaptive entities. With the culmination of the GBTC-related maneuvers, attention swiftly shifted towards the next potential opportunity. In this case, the spotlight shifted to the burgeoning prospect of an Ethereum ETF, signaling the perpetual quest for new avenues of investment and speculation within the cryptocurrency domain.
And then before you know it, it starts building momentum. They see the price rising. Volumes will slow down. Let's assume tomorrow's like 500 million, whatever it is, right? It's going to be a lot less. But I said this about a year ago. I said, well, the Bitcoin ETF all depends on where the Bitcoin price is when it launches. And I said, look, if it's about 50,000, randomly chose that number and it's right there.
Yep.
And not because I'm a prophet or anything, but I was like, well, if it's around 50,000, people are just going to go, well, it's not far to the all-time highs. I want to get it before it gets to the all-time highs, and that momentum cycle starts. Because price is the driver of narrative, is the driver of volume, is everything in this space. So it's kind of come at a perfect time. And then let's say it goes quiet for a little bit, and then we get the Bitcoin halving noise, and then the crypto, the macro cycle, the rate cuts. That's all to come ahead of us.
The viability and performance of a Bitcoin ETF are not solely dependent on the digital currency's inherent characteristics, but also on broader market dynamics and investor sentiment. The launch timing of a Bitcoin ETF is crucially intertwined with the prevailing Bitcoin price. If the ETF debuts when the Bitcoin price hovers around $50,000 or near its all-time highs, it is more likely to attract substantial investor interest and momentum. Such price levels tend to generate heightened attention from both retail and institutional investors, fostering a positive outlook for the ETF's success. Beyond absolute price levels, market sentiment and momentum also play pivotal roles in shaping the reception of a Bitcoin ETF. A favorable sentiment surrounding Bitcoin can significantly bolster investor confidence in the ETF's potential returns. Don't forget that liquidity considerations are paramount in the evaluation of Bitcoin ETF success. A liquid and deep market ecosystem not only enhances price discovery, but also facilitates seamless ETF trading and redemption processes. ETFs launched during periods of heightened liquidity and trading volumes are better positioned to navigate market fluctuations and meet investor demand effectively.
The liquidity cycle, all of that. So it it could not have come at a better time. So I think the probability is it does better this year than people expect. What wouldn't surprise us by the end of this year? Could Bitcoin be at 100,000? Yeah, that seemed right for a normal bull market. So, okay, that's a 2.5x from here or 2x from here. It doesn't seem impossible, which is why I've also been talking about this could be quite a bit of a bubble cycle, whether it's front loaded, so it all happens in this year, or whether it really overextends like some of the prior cycles did. I think that's possible here. So we just have to wait and see. 88% of people who were going to buy crypto were going to wait for the ETF to come. So they didn't expect it. It's now come. They now have to go to their clients. This is this lag I talked about. They have to go and have golf with their best clients and sit down and have that steak dinner and the bottle of expensive wine and say, you should be buying some Bitcoin. They don't go send out through some electronic platform. It's this. That's what we will see. And then they will get the incoming calls from their friends at the golf club who've heard it from their other friends that they're making money in this Bitcoining thing. Get me in. Let's play that game. Hunter as well gave it a 50-50. And he's been deeply involved in all of this. And he said the difference with the Bitcoin ETF.
The lagged effect of an ETF launch in the cryptocurrency market carries substantial implications for investors. Recent data reveals that a significant portion, approximately 88% of individuals interested in purchasing cryptocurrencies, have been patiently awaiting the launch of an ETF. With the introduction of a crypto ETF, investment advisors will find themselves facing a new landscape for and promote cryptocurrency investments to their clients. Unlike traditional assets, cryptocurrencies have often existed at the periphery of mainstream investment strategies, with advisors exercising caution due to the market's volatility and regulatory uncertainties. However, the advent of an ETF signals a shifting tide, compelling advisors to engage in discussions about the potential benefits of including crypto assets in diversified portfolios. Beyond the formalities of financial planning meetings, advisors will need to cultivate open dialogues that address not only the potential rewards, but also the associated risks of investing in cryptocurrencies. By fostering transparent and informed conversations, advisors can empower their clients to make sound investment decisions that align with their financial goals and risk tolerance levels. Moreover, the influence from acquaintances who have experienced favorable outcomes from their Bitcoin investments cannot be understated. As stories of significant returns and successful ventures circulate within social circles, they serve as compelling testimonials that fuel curiosity and stimulate increased interest in cryptocurrency investments. These anecdotal accounts, coupled with the institutional validation provided by the introduction of a crypto ETF, collectively contribute to a broader cultural acceptance and adoption of cryptocurrencies as legitimate investment vehicles.
There was that court ruling from GBTC, and they couldn't not do it. So he said, so you can't infer that. And there's always complications behind it. So he'd say 50-50. And so most people are saying 50-50. My personal view is actually Gensler wants ETH and BTC into the financial system. If they're the two largest assets, you want control of them by the incumbent firms. Because if not, it's a threat to have this independent financial system. It's a threat to their whole system. So even though he hates this stuff, he'd rather be frenemies than enemies. So that's my hunch here, is that regardless of what he wants, he has to accept it. Maybe there's a bit of delay, a little bit of delay, not rejection, but delay, blah, blah, blah. So let's say by August, which is the second date or something, let's assume that by August, we've probably got a decent chance. I would say 75% chance. All on crypto Twitter is everybody is a mid-curve. That mid-curve meme, right? Arguing with each other about what is liquidity, what is that, is there a recession, blah, 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 all day. It's overvalued, this. The liquidity curve, The everything code just says liquidity in, I buy it. That's it, right? And liquidity in drives assets, and the more liquidity, the more people take more risk. Simple as that. That's the understanding. So when you see liquidity bottoming, it allows you to start looking at ETH was in that free fall then, but it maps perfectly liquidity, and liquidity had bottomed. I'm like, okay, this is a probability. You got a chart pattern as well that it all matches. So that liquidity cycle makes it super easy. But the everything code is really the culmination of 30 years work. But what most of us didn't understand was 2008, the entire world changed. We know it broke. We know the debt system broke. And people have been trying to look at the world ever since, including myself. I only figured this out like 2.5, 3 years ago, 2 years ago. And the everything code I only wrote last year is that something fundamental had changed because of the use of the balance sheet and liquidity to manage things.